Alright guys, welcome to a new video. My name is Ruben, I'm from Australia, and in today's one I'm going to be breaking down my A+ strategy, how I've achieved a 70% win rate with the Discord community this month, and also give you some examples of how to implement this strategy. With that being said guys, sit back, relax, let's get straight into it. Right guys, on this side of the screen here at the top, you're going to see a log of all the trades that I've mentioned for the Discord community. And what I want to point out to start off with is that we didn't actually have a good run to start. You know, if we have a look here for the Asian session, we took 1, 2, and then 3 losses in a row for the Asian session to start. So Asian session actually started a little bit rocky, whereas London session, we started with a really nice trade that had a runner. And then after that, we started going into a losing streak in the London session itself. So what you're going to realize is that with my system and with any system, you're going to have drawdown periods, but this is a part of any normal profitable system. And what actually happens is as the weeks go on, we start to mitigate those losses. And what ends up happening is both accounts actually end up in profit. So on the screen here, I'm actually going to put a snippet of a graph that shows you side by side the Asian session and the London session stats and how these accounts would have played out if you risked 1 mini per trade. Let's get into that. So what I want you guys to have a look at the start is the green curve, right? The green curve is if you were trading on one account and you took all the trades. You can see that yes, the first 10 to 15 trades, because one session was profitable to start and the other actually went into drawdown, you can see how it kind of trends across. But at some point in time, the edge will start to play out. And so you can even see on the chart there, between these two charts, like this orange chart here, that's the Asian session. We started in drawdown, then we went into profit. In the London session, we started in profit, went into drawdown, and then back into profit. And these are normal curves that you're going to have for any profitable system. So this is 1 mini per trade, mostly one-to-one trades, and every single trade charted with the stop loss exactly what it needs to be based on the market structure. And you can see how profitable this system is. The Asian session, I think, ended up at about 78%. The London session was about 60, 58%. And these are the things that actually show you, like this data, you can't lie in stats. This data shows you how profitable these systems can be. And I've been trading this way for many, many, many months now, and years technically. And I thought I'd show you guys these stats. This is one whole month of stats. You can see different curves, different charts. Now let's move into my exact strategy. Let's go. So you've seen the stats, you've seen the proof, but what is my exact strategy and what is my model? And so what I've actually done here, I've simplified it for you guys. I've simplified this model because a lot of people are going to ask me, well, what is your system? This is my model, right? So my model involves looking for price, right? Looking for price to react from key areas, number one. So you want to write that down. For example, a fair value gap or premium and discount. When we react from an inversion fair value gap or a change in the state, I take the trade and I make sure there's a clear draw on liquidity. So I target what's called low resistance liquidity, and we'll talk more about it today. I often target a one-to-one, and sometimes I'll hold the trade a little bit longer, and that's it. So there's certain areas in the market where I look for reactions. If I get a reaction, I target low resistance. And if it happens during a macro, fantastic. I am for a one-to-one. If it goes further, fantastic. And what you're going to see on the screen here is you're actually going to see examples of trades, right? Of snapshots. And so we'll get into some annotations first as to what it looks like. We'll start with the bullish one first. And this here is the bullish use case, right? So let me just zoom out a little bit here so you guys can see. Now, in this example, what you're going to notice is this. We actually have a point of interest here. That could be, for example, a fair value gap. Price comes down into that fair value gap. That's the area. We react, obviously, ideally during the macro, and then we form an inverse fair value gap here, targeting that low resistance. Range high, range low, we also come back down into discount. If we go over, this side here to this one, this is now a bearish example. And this bearish example is pretty much the same. So we're looking for the same thing. We're looking for a point of interest, a fair value gap. It can be really any PDRA that you want, but I use fair value gaps. We have the inversion fair value gap, the low resistance, we take the short, happy days. So it's really a simple strategy. I'm not using, all these algorithmic principles. I'm not using any new PDRAs that ICT has come out with. I'm not using standard deviations. I'm not using volume profile. I'm not using indicators. I'm purely using market structure and repeatable patterns that I've seen happen in the market. And it's really great to see a lot of my premium members and free members in the Discord. If you haven't yet joined that, the link will be in the description below. They're seeing success with this model too. Not just in the London session, the Asian session, but also the New York AM and the New York PM session. So keep watching this video because just know that what I'm saying here, it applies to all sessions. But this is my system. This here is my model, and this is how I like to trade. So if you haven't yet, go and join my Discord, right? It's free. I've got a free A+ checklist. I'm going to show you guys what it looks like here, and we're going to use this to assess the trades that I took and the winning trades that I took as well to go through what was relevant. Now, what we're going to see is this, right? It's free to download, but this is what the checklist looks like. And you can screenshot that if you want, but go and download it, use this on your chart and look for these things, right? I'm looking for macros, I'm looking for SMTs, I'm looking for sweeps, I'm looking for premium and discount, I'm looking for fair value gaps. This is like a little checklist that'll take you through exactly what to look for. These things here, right? These things are all the A+ things that I'm looking for to take a trade. And if you have a system, and this is my system, and you continually implement that, you saw exactly with those stats how you can still have losing streaks. Let's go back to it. You can still have losing streaks, but you can still be profitable. You don't always have to start profitable. You don't always have to start down. You can start kind of neutral, and then eventually your edge will start to shine as long as and provided you continue to follow your system. And that honestly is the most important thing. So there's a bit of a summary of my strategy. There's a bit of a summary of the stats, and you can see it's highly profitable. Profit factor sitting over 2 for both accounts there for the Asian and London session. Now let's get into some specific examples from both the Asian and the London sessions. And I want you guys to really focus on this because this is where it's really important. I'm going to take you through the confirmations, the confluences that actually allowed me to call out these trades, that gave me confidence to mention these trades, right? So let's go back into this and let's have a look. So what you're going to see is a range of trades here. And we're going to start with this one. And so what I'm going to do today is I'm going to break down the frameworks, right? I'm going to break down the frameworks. I'm going to break down the confirmations that gave me, I guess, confidence to call these trades out. And I want you to take notes. Then I want you to try and apply this for yourselves because the real learning happens once you watch, you listen, and you apply for yourself. This is the application, and this is me showing you behind the scenes, not only into the premium Discord, but also into the types of trades that I take that are profitable. Let's go. So this first trade here, this is a Asian session based trade. And I want you guys to realize is the following. If I just zoom in here for a second, have a look at this, right? Now, notice how I've got 2 letters. I've got A and I've also got B. A lot of people, they come to me and they say, Ruben, how can I be 100% correct? How can I know? How can I predict where the market's going to go? Well, the first thing I want to say to those people is you can't predict. And so what you're seeing here is my 2 examples for the premium Discord of what could happen. I don't know what is going to happen exactly, but what could happen. So example number 1 here, a really typical example. Again, this is the area we're reacting from. We could do that and invert this fair value gap and then move higher. We've got low resistance here. We could do that, right? But ultimately, we could also come back down here into OTE and react from this fair value gap. I don't know. I don't know. I don't need to know, and neither do you. What we need to do is to react if the market actually comes into this spot. So we start with this, right? That's our framework. We mark out our areas. And then as price moves, if we go across here, you can see if we go down right here, I think it's this one here, you can see that price comes into optimal trade entry, right? So this is the chart here. That's what it looks like at the open. And then this is when it opens. It comes down into optimal trade entry. That is the area where price can react from. And then simply we're looking for the inverse fair value gap. That becomes the entry there. Stop loss goes there. You take your 1-to-1 and happy days. That's it. And you're going to see this framework played a lot of the time. So the first thing for your notes is use optimal trade entry and use premium and discount. It's the easiest way to build a narrative. If we are in discount, look for longs. If we're in premium, look for sells. Everything else is not going to be A+, half the risk. It's going to save you in the long run. Trust me. So that's the first example there. The second is this one here, and this is how I kind of build a narrative. And you'll see 3 things here, but I'm going to break them down each individual step to take you through the process of how I build a bias. So look on the side here, right? This is the Asian session. And what I want you guys to look at is what I've drawn there for the community. You can see that there's that big gap, right? It's a big 15-minute. This is the 15-minute chart. It's a 15-minute fair value gap. And I want you to write this in your notes. Fair value gaps can act as support and resistance. So what you can see in this area is the market has traded into that gap. And I want it to act as support. Why, Ruben? Why? Because it's a really big fair value gap. A really big fair value gap, you expect it to act as some kind of support. If we invert that gap, that's really bearish. So you kind of assume bullishness in this case until proven otherwise. And you look for longs. Pretty easy narrative. If we move over here though, what I've done, I've marked out the different quadrants. Let me just move this chart over. And what you're going to see is I marked out different quadrants of this fair value gap. And you might have seen ICT do this with wicks. You can treat wicks like fair value gaps. And I often do this, right? When there's a massive fair value gap like this, I don't really know where the market's going to go. It could bounce here, it could bounce here, it could bounce here. I don't know. So what I do is I mark out the quadrant levels of that fair value gap, and I look for price to react specifically from any of these quadrants. Not just one, not just the top one, not just the bottom one, from any. It doesn't matter which one we react from. As long as we react from one of those, I'm more confident in taking the trade because they're more like algorithmic price points and they're more solid price points that kind of divide that gap into different segments. So we start with that. That's the T at the top, right? You can see that, bang. Then we go into this, marking out the quadrants, and then we watch to see, right? We watch to see what happens. And what you're looking for here, again, is the clear draw on liquidity, all this low resistance liquidity. So 0.25 of the gap, we ended up pushing higher from here, happy days, right? So you're starting to see how I'm building these narratives. Those are two examples from the Asian session. Let's actually hop over now into the London session, right? And you're going to see how I use exactly the same thing. It doesn't change. It doesn't change. I've used exactly the same thing for years now, literally years. And here is another example of a trade mentioned for the premium community. And what I say here, again, trend continuation opportunity for London Open. Why is it a trend continuation, Ruben? Why? Well, because look, we got a swing high, swing low. We pull back down into optimal trade entry. And what happens? Inversion fair value gap. Now you might say, well, Ruben, what about this one? Why not enter off this inverse fair value gap here? I'm on the 1 minute chart here, right? Look, I'm on the 1 minute chart. So when you're on a smaller time frame, you've kind of got to wait for a little bit more confirmation. Otherwise, you're going to get cooked. If you're just looking for an inverse fair value gap or a change in the state on the 1 minute, and there's no other higher time frame context, here it's simply a 1 minute range. You need to wait for a little bit more to be inverted, and that's why I'm waiting for this. So I've got that there. That's the T. What ends up happening? Bang. Quite an easy trade, quite an easy framework, easy. And this here is actually at the 1250 to 110 macro. So a lot of people say they can't trade the London session. This is before the typical London Open session. So check it out, right? Using optimal trade entry, using the ranges, pretty stock standard. There's also this one here too, right? So let's go back over here a little bit more and let's talk about losing trades, because losing trades are a part of the game and they're a part of the system. And a lot of people don't want to show it. I've been posting pretty much every single day that I post stuff for the Discord on Twitter. So if you haven't followed me there, follow me there, Full V Trading. And this trade here was good. I liked it. It had everything I needed. And so I called it out. And guess what? It did not work. All right, look. We got a range. We got a range high. We got a range low. We come below equilibrium here. Fantastic. We tap into a 5 minute fair value gap. And we have an inverse fair value gap created with impulse during the macro. Looking for longs to these highs. Does it happen? No. That's a part of the system. So you're going to see winners, you're going to see losers, but what you're going to see is that even if there's a losing trade that uses a winning framework, it doesn't mean that the system is broken, guys. Again, go back to this chart here and have a look at the fact that at the start, we had 3 losing trades in a row for Asian session. That's the orange or yellow line. In London session, we went up to start. But what matters most is over a long span of time, how does that edge look like? So have a look, right? From 0 trades to, say, 20 trades. Is the account up? Are the accounts up? Yes. What happens in 2-3 trades doesn't matter. What happens in 20, 30, 40, that's what matters. That's what proves if you have a profitable system or not. And then the next thing is, do you implement it? Because you could have a profitable system. I could call these trades for the community. I could take these trades. But if I'm not following my system, it doesn't matter what strategy you have. If I'm not following it, if I'm not implementing my edge, it's not going to be profitable. Nothing will work, right? Unless you actually implement the edge, especially in periods of drawdown. So imagine you take 3 losses and then you just go off the rails. Well, guess what? Your edge is not showing. It's hard. It's tricky, I know, but it's possible to come out of drawdown, but you have to implement your edge and stick to it. No matter what, right? We'll get into the charts in a second, but these are some examples here. Now, what I want to go through is a few other bits and pieces, right? So different trades from the Asian session, London session, different calls that I've mentioned here, and just things that you guys can study for yourself, because there's so much that the market can do, but there's some repeatable frameworks that the market gives us that I think are important to talk about. And this is one of them here. So let me just move that across and just have a look at this photo here. Now, I want you to read the text, and I pretty much say here that an external low has been swept. Now, an external low is any low that has been formed on the 15-minute chart like this, right? That's the 15-minute chart. And whenever we sweep an external low, I want to see an instant reaction. If there is no instant reaction after sweeping an external low, then it's out of my park. I don't want it. I don't want anything to do with it, because external markets, the 1-minute chart, you'll get cooked, right? If there's a higher time frame trend, you don't want to trade that. I like to trade when there's internal ranges. But if we sweep an external low, we want to see an instant reaction. If there's no instant reaction, I sit on my hands, come back to the next session. So we have a sweep of that low. I'll mention here to the community, if you have a look there, that I want to see, let me move this across. I want to see that happen, right? A sweep of the low, a reaction, an inversion fair value gap, and then target the highs. It doesn't scare me that we've had a big drop. It doesn't matter, right? We've dropped to sweep liquidity. We've dropped to sweep liquidity. And now we're inverting that space to move higher. Now, what happens here? We get our framework. We get our trade. Perfect. Everything there we need to see is there. We take the trade. Happy days. And you're going to see a lot of this is support and resistance, right? Whether you use a fair value gap, an N-dog, an N-wog, a breaker block, an order block, premium, discount, OTE, standard deviation levels. In essence, we are looking for areas where the market's going to stop at the bottom or the market's going to stop at the top. And some of these trades are trend continuations, others are full-on reversals. I take a mix, and this will work in any market because all markets work with candlesticks. All markets have some kind of market structure. So keep that in mind. Now, have a look at this one. Bang. What is this called? This is called a new week opening gap, right? And these are my thoughts if I just move this across. I pretty much say here that price has traded down into the new week opening gap. So I'm looking for this to act as some kind of support. There's low resistance liquidity on the buy side, and I'm scouting for any inversion fair value gaps to enter from. But what have I also done? Think back to this example here. Look, we had a massive fair value gap, and what did I do? I marked out the quadrants. So what do you think I'm going to do with the new week opening gap? Same thing. A new week opening gap, guys. A new day opening gap. It's just a fair value gap. Trade it or treat it as a fair value gap. You don't have to do anything fancy with it and mark it out over multiple days if you want to do that, but pretend it's a fair value gap. You can see our price is reacting from the halfway point quite perfectly. And there's a trade. Pretty easy, right? So this is the system. And if we go back to this, again, this is my model, right? This is my model. I look for price to react from key areas. I've shown you guys some already. Number 1, sweeping liquidity. Number 2, fair value gaps. Number 3, NWOGs. Number 4, right? What do we have? Liquidity, NWOGs or NDOGs, fair value gaps, right? And then premium and discount. So there's so many examples, right, of how you can find areas where the market can react from. And then all we need to wait for the reaction. If there's no reaction, there is no trade. It's as simple as that. And sometimes you win and sometimes you lose. So take a look at this, for example, right? Look, this is another one for you guys. This is very recently in the London session where we have what's called a 3 drives pattern. Drive, drive, drive. Each time we drive, we're actually generating sell-side liquidity on the downside here. Sell side. And you can see how there's a fair value gap here and a fair value gap there. So we drive. And then eventually, when do we pop? We pop during this macro, and macros exist every single hour, 10 minutes before, 10 minutes after. And I'm a bit more flexible now, so most of the trades I take and most of the trades I call, I prefer to call them in macros, and I risk more if I was trading them in macros. But you got to understand that my style has evolved like any other trader. And now what I'd say is that I trade not strictly macros, but I trade macros and market structure. So all these things, fair value gaps, premium discount, 3 drives, NWOGs, NDOGs, liquidity sweeps, Power 3, SMT, all these things that I mentioned here in this checklist, right, that you can download for free, all these things are what I'm looking for. And notice how the macro is just one of those things. It's not the only thing. It's not the be all and end all for me anymore. It's one of those things. So if I have, 6 of these things, 1, 2, 3, 4, 5, 6 out of 7, and the macro is not there, I'm going to take it. If I have 5 of those things and the macro is there, I'm going to take it. But if the macro is there, then it makes it high probability. And you're going to see this once you, start to collect data. So this is really interesting. And I thought I'd take you guys through some of these trades. There's so many here that I can talk through. Right, here's another good one, because this will give you insight into how I trade, what I call for my premium community, but also maybe you get some ideas as to how you can build a checklist for yourself and how you can build a system for yourself if you're struggling. Look for the area, look for the reaction, look for the target. Area, reaction, target. Area, reaction, target. If you can have a time, like a macro, even better, but look for those three things. So let's do that here. This is the good old 15-minute chart, the bellwether chart, as ICT calls it. So 15-minute chart. You can see what price has done. We've got a range high, boom, range low. Price trades up into optimal trade entry, and it trades into this fair value gap here. What do you reckon I'm looking for? Longs or shorts? Shorts. Premium, shorts. Discount, long. So my bias is easy. I'm looking for shorts. The next thing I need to do is to make sure I've got liquidity and to make sure I've got a reaction that I like. So if you go over here now, look to this second screenshot, that red box is the 15-minute fair value gap. So if I zoom out just a little bit now and move this diagram over the side, that red box is the 15-minute fair value gap. And what I've actually got here, right, if I move this too, I've got two charts. And one is the NASDAQ, let me zoom out a bit, and one is ES. So over here you can see the NASDAQ, that's on the left-hand side. And on the right-hand side, you've got ES. And this is where we can discuss the concept of SMT and how that plays a role. A lot of people ask me, Ruben, do you always look for SMT? The answer is no. Do I require SMT to take a trade? The answer is no. But if I'm inside of an area, I'm looking for a trade, and there is SMT present, then yes, I use it as a confirmation, which you can see here. So it starts at that high time frame, boom, right? We're in optimal trade entry, look for shorts. We see that we have SMT at those highs. Great, that's another confirmation. You can see the NASDAQ is making higher highs, right? Whereas ES is making lower highs. Then all we need to do is to drop back down to a lower time frame. This is the call that I made for the Discord. If we invert that, then we're going to move lower. And then what happens? We invert that and we move lower. It's quite easy, right? That's the system. That's the system. So a lot of these have optimal trade entry. A lot of these have fair value gaps. A lot of these have a bit of SMT in the mix. And you're not always going to take winners. You know, this one here was from, I think, the 25th of November. And a few people in my Discord, if you're from there, you took these trades. They're good trades. Not all of them are going to win. Like, you just got to appreciate that, guys. It doesn't matter what anyone else says. There's a lot of people talking on social media when someone loses, oh, you shouldn't have taken that. Well, if it follows your system, you should have. And so I'll call this trade any other day of the week. It's a macro. It's 150 to 210, right? We have a change in the state of delivery. We have impulse. Just didn't work out. The next one, we wait for the end of the macro. We wait for the next inversion fair value gap and see this red box down the bottom, or green box, sorry. That green box there is a 15-minute fair value gap. So we're still in the macro, plus or minus 5 minutes. We're inside of OTE, that's those two blue lines. We've got a macro inversion, great. Take the next trade, we mitigate the loss, plus we gain 5 handles. So that trade, or this trade here, was a loser. This one was a winner, but we still ended up profitable for that session. Does that make sense? And you don't have to take big trades. Like, you can hold if you want to. You can hold that long if you want to. You don't have to. You can take losers. Look at this, right? You can take losers. On this given day, there was a losing trade to start. We got chopped up. And what did? We just waited. We waited for Asian sell side to be swept. We waited then for an inverse. We took an entry. And then there was another trade that was also a winner. So sometimes you have the narrative correct, but you might be a little bit too early. A lot of people think that you need to try and fix that. Not necessarily. Because probability suggests that you are going to take losers in the market, even with a profitable system. So this is how I like to do it. And this is my system. This is my model. Not all of them are going to work. Sometimes we get chopped out, like here. We took multiple losses in that red circle. But what do? We came back and there was another trade outside that would have mitigated some of that loss. Still a losing day. You have losing days. What do we tap into? The green box, 15-minute fair value gap, and then we react. So ultimately, this is my system. This is my strategy. The stats are the stats. You saw the chart before, right? You saw how it looked. You saw all the stats, all the trades. And ultimately, this will prove to you guys and hopefully show you guys that what I teach is profitable. You can use it too to become profitable, to increase your profitability. But what you need to make sure you do in order to get that profitability is to follow the system. Even in periods of drawdown, guys, you have to follow your system, right? So I want to talk about how these curves look and the different mindsets now that people have to end this video, a little bit on psychology and how to manage that. I know it's a long video, it'd probably be like 30 minutes, but I need to talk about this and discuss this because it's really important. It's not just the system. You've seen some examples. It's also how you implement that, how you deal with these, adverse situations. Right, so we're back here. I'm going to annotate this. Now, we're going to start off with the Asian session. And what you can see here is that we started with a bit of a losing streak. Now, this is what gets people, right? People will take a losing streak of 2, 3, 4 trades, and they will automatically think that they need to fix something with their system. What do they do then? They do random things, random. They mess up their edge, they lose even more, and then they give up. Or they move to a new system or a new strategy thinking that it's the strategy. It's not the strategy, it's you. And I realized that it's a harsh reality, but it was me. It's me that's stopping me not getting payouts. It's me that's stopping me not getting, passing counts. It's me that's blowing up. It's me. It's not the market, it's me. It's my choice to press that button. And so I need to make sure I'm following that system. Now, if you do follow your system, look, you go into a bit of drawdown, minus 1500, which is, for a lot of people, is scary. But then what happens if you start trusting your edge? It moves up. So you go all the way down here, and then you get all the way back up. And you have a nice clean run. But if you don't give yourself a chance to turn around that edge, you're going to blow up accounts, you're going to lose a lot of money, and you're going to find a lot of non-success and a lot of, mental anguish and turmoil because you're going to struggle with, progressing. The same happens with London session. So London session, we started with a bit of a winning streak, but then we actually went into a period of drawdown for about a week and a half, about a week or so. So a lot of people can't handle that. They go really good. They think that everything has to move up and up and up. And then when it doesn't, they freak out and they break their rules, they over leverage, and then they mess up everything, right? They go into even more drawdown. So both things play with your mind. But if you got the data, if this doesn't prove it to you, collect your own data and see, right? Follow your system, follow your rules for 20 trades. And I guarantee you, right, with pretty high confidence, shouldn't say guarantee, but with pretty high confidence with my system, this is proof. The proof's in the pudding. You can't make up numbers. Numbers don't lie. Stats don't lie. This is a profitable system, even with periods of drawdown. So we have a period of drawdown here, and then we've started to build it up, right? And overall, you can see between the two accounts, one starts up, one starts down. And that's why here you have this period that's kind of rocky. And then afterwards, both accounts progress. So this is the overall trending of the accounts. That's over 20, 25 trades, as you can see. So I want you guys to just think about that. This week, I'm going to probably post this midweek. We'll see how we go. This week, your goal, if you're struggling to, stay funded, keep an eval, follow your rules for 3 days. Start with that. Just 3 days. And then once you can do that, then go 5 days. And you're going to see if you give yourself the chance, if you give yourself the chance for your edge to play out, then you're going to actually see success. But if you don't, right, if you're on a winning streak or a losing streak and you start deviating from your strategy because you get fearful or greedy, well, guess what? Your edge no longer exists. Your strategy no longer has an edge, and you're not even implementing that edge anyway. So you're going to get cooked in the markets, and it's going to be a downward spiral from there. But you can do it. You can put in the work. So to end this video, guys, I want to conclude with that psychology lesson, and I want to point your attention to the description below. Join the free Discord, download the free checklist. It's completely free. And I'm going to do one of these videos once a month where I'm going to break down the trades we took. I'm going to go through the stats, right? This month being December, there may be less because I think trading will stop a little bit earlier for me. But the proof's in the pudding, guys. You can do it. If I can do it, you can do it. You put in the work, you stick to your model, you stick to your system, and you'll see success. Hopefully you guys enjoy this video. If you have any questions or comments, leave them down below. And until next time, guys, I'll talk very soon. All the best. Peace out.